Every single day, people lose money, not because they are careless and not because they are uneducated. They lose money because the people running investment scams are sophisticated, they are organized, and they understand human psychology better than most people give them credit for. In 2016, the MMM scheme in Nigeria collapsed and wiped out an estimated 18 billion naira from Nigerian investors in a matter of weeks. In 2022, several Ponzi schemes that had rebranded themselves as crypto investment platforms disappeared overnight with billions of naira that belonged to everyday Nigerians. And yet, new schemes continue to emerge. New victims continue to be found. The question is not whether these scams exist. The question is, do you know how to identify one before it costs you? In this video, I am going to walk you through 4 specific, verifiable signs that an investment opportunity is a scam. And I want you to pay particular attention to the 4th one because it involves a free, publicly available government tool that most Nigerians have never used. Understanding how to protect yourself is not optional. It is a financial skill, and today we are going to sharpen it. The first sign, and arguably the most overlooked, is that they contacted you first. The first question you must ask yourself when any investment opportunity is presented to you is this: who initiated this conversation? Regulated financial institutions, banks, licensed investment companies, registered fund managers do not acquire clients through unsolicited direct messages on Instagram, Facebook, WhatsApp, or Telegram. That is not how the financial services industry operates. Client acquisition in legitimate finance involves regulated marketing, licensed representatives, and documented processes. When someone contacts you out of nowhere, someone you have no prior relationship with, to offer you a chance to make money, that is not a business opportunity. That is a targeting strategy. Scammers cast a wide net. They send hundreds of messages and only need a small percentage of recipients to respond. You are not special to them. You are a number. It is also important to understand that the messenger is not always the scammer. Many times, the person who sends you the link or refers you to the platform is themselves a victim. Someone who has already invested and now has an incentive to recruit others to sustain the scheme. Their confidence in the product is real. Their experience of it being legitimate is real, for now. That does not make it safe. If you did not go looking for it, treat it with serious skepticism. The second sign is that the promised returns are financially implausible. This is where financial literacy becomes your most important defense. To evaluate any return on investment, you need a reference point. Here is what legitimate, regulated investments in Nigeria currently offer. Fixed deposit accounts with Tier 1 Nigerian banks yield between 7% and 13% per annum. The Nigerian Stock Exchange All-Share Index in one of its strongest recent years returned approximately 45%, but that is annual, and it came with significant market risk. The top-performing regulated mutual funds in Nigeria target between 15 and 25% returns per year. These are the benchmarks. These are what serious professional fund managers, people who do this full-time, are able to achieve. So when a platform promises you 30% in 2 months or 100% on your capital in 6 weeks, you are not looking at a superior investment strategy. You are looking at a mathematical impossibility being presented as an opportunity. No legitimate asset class generates those returns consistently. The ones that promise it are, without exception, either unsustainable pyramid structures or outright fraud. MMM promised 30% per month. It collapsed. Racksterly, Loom, MBA Forex all promised exceptional returns. All collapsed, and in most cases, the promoters disappeared with investors' funds. When the return is too high to be explained by any real economic activity, there is no real economic activity. The money coming back to early investors is simply the money of newer investors being recycled. It ends when recruitment stops, and when it ends completely. The third sign is that you are being pressured to decide immediately. Artificial urgency is a deliberate psychological technique. It is not accidental. It is not enthusiasm. It is a tool designed to compress your decision-making window to the point where rational evaluation becomes impossible. Phrases such as, "this slot closes tonight," or "I am only offering this to a few people," or "if you don't invest by Friday, you will miss the cycle." These are not reflections of legitimate market conditions. They are pressure mechanisms. Their sole purpose is to prevent you from doing what every responsible investor should do: research, verify, and consult. Consider how a regulated financial product operates. When you walk into a bank to open a fixed deposit account, no one tells you the offer expires at midnight. When a stockbroker presents you with a portfolio recommendation, they are required by regulation to give you time to review a key information document before you commit capital. Legitimate investment carries documentation, disclosures, and time. Urgency in investment context is almost always manufactured. The only thing that genuinely expires overnight in financial markets is a scammer's preferred window before you start asking questions they cannot answer. If you feel rushed, that feeling is data. Act on it. Step back, request documentation, and take whatever time you need to do your due diligence. Any legitimate opportunity will still be available after you have done that. The fourth sign, and the one I want you to remember above all others, is that they are not registered with the Securities and Exchange Commission. This requires no financial expertise to verify. Anyone with a smartphone and internet access can do this check in under 3 minutes. The Securities and Exchange Commission of Nigeria, the SEC, is the federal regulatory body responsible for overseeing the capital markets and investment industry in this country. Under the Investment and Securities Act, every company that manages, solicits, or pools investors' funds in Nigeria is legally required to be registered with the SEC. Operating without that registration is not a gray area, it is a criminal offense. The SEC maintains a public register of licensed operators, fund managers, investment advisors, collective investment schemes on their official website, www.sec.gov.ng. If a company is registered, you will find them there. If they are not on that list, they are not authorized to be collecting your money. Beyond the register, the SEC publishes a formal public warning list, a regularly updated directory of platforms and companies that have been investigated, flagged, or reported for illegal investment activity. This list is not buried, it is publicly accessible on the same website. Before you invest anywhere, that list should be one of your first stops. The uncomfortable truth is that most Nigerians who have lost money to investment scams never checked this list. Not because they didn't care, but because by the time they were presented the investment, urgency and excitement had already taken over. The emotional work had already been done on them. Do not allow that to happen. Make the SEC check non-negotiable. Treat it the way you would treat verifying a contractor's credentials before paying them to build something. You wouldn't pay someone to build your house without knowing they are qualified. Don't invest your money with someone who cannot show you a regulatory registration. Now, let us consolidate what we have covered today. The first sign, the approach was unsolicited. If someone you did not seek out came to you with an investment opportunity, it warrants immediate skepticism. The second sign, the promised returns are financially implausible. If the numbers cannot be explained by any legitimate economic activity, they are not real. The third sign, you are being pressured to decide immediately. Artificial urgency exists to prevent you from thinking clearly. Protect your decision-making process. And the fourth sign, they are not registered with the SEC. Visit www.sec.gov.ng. Check the register, check the warning list. Do this before you move a single kobo. Financial fraud thrives in the space between what people want to believe and what they take the time to verify. Close that space. Your due diligence is your first line of defense. Now, I want to hear from you. Have you encountered any of these signs? Have you or someone close to you been approached by one of these schemes? Share your experience in the comment section. Your account of what happened and how they approached you may be exactly what prevents someone else from making the same decision. If this video was useful to you, subscribe to the channel. We publish financial education content every week, focused on what is relevant, what is practical, and what actually applies to our situation here in Nigeria. Share this video widely. The more people understand how these schemes operate, the harder it becomes for them to operate.